Markets surging to multi-year highs today as Fed head Ben Bernanke launches a massive new round of quantitative easing stimulus. On the news, the Dow soared over 200 points. Gold rallied 38 bucks. King dollar stumbled 0.5%. First time King dollar is below 80 since last May, and that ain't going to be the bottom either. So let's talk. Back again, Don Luskin, Chief Investment Officer at Trend Macro. All right, I know you think the Fed went politically rogue. I don't disagree with you. We're going to talk about that with a couple of House members. But what I want to ask you is this, Don. I can hardly keep a straight face.
I can only imagine what they're going to say.
If the U.S. Central Bank is putting in $40 billion new dollars every month, maybe forever, if you read Bernanke's statement, or at least for a couple of years, what does that mean for the stock market? There's an old axiom that says, don't fight the Fed.
Larry, if they were putting $40 billion a month into the stock market, we could have a conversation. But what are they doing? They're putting it into the mortgage market. Now, just before the show, I did a quick survey of the 307 million people in the United States. I was able to find 42 of them only who were not buying a house because mortgage rates were too high. This ain't going to work, man. Stimulus doesn't work. Doesn't work when Congress does it. Doesn't work when the President does it. Doesn't do when the Fed doesn't work when the Fed does it. The most a central bank can do to help the economy is to loosen when it's previously made the mistake of being too tight. The Fed is not too tight now, folks. Loosening further just ain't gonna help.
Okay, so let's assume, by the way, that there's arbitrage out of the mortgage market and into the stock market and some other markets, which is what I think is going to happen. But let me ask you this: one market, you know a lot about it, the dollar, the exchange rate market. Well, how long will it take for the dollar collapses, and then how long will it take for gold to go to, I don't know, 2,000, 2,200, whatever you think?
Larry, it really depends truly how long this $40 billion a month goes on. If it goes on forever, then sky's the limit, at least for gold. You know, gold could go to 10,000 at the same time as the S&P goes to 100. Believe me, if the Fed is still doing $40 billion a month 2 years from now, that's not a good thing, because it wouldn't do it unless the economy were still in the gutter. So this is a trade-off. They only do the good thing when there's a bad thing. So if you are wishing for them to do the good thing, that means you're wishing for the bad thing. That's why this doesn't work. Well, that's why this isn't going to help stocks.
I know. Okay, well, that's an interesting point. I want to go back to that, why it's not going to help stocks, because I don't know what the short run is anymore, whether it's 5 days or 5 months or 5 years or whatever. But if Bernanke is putting all this money in, okay, every month he's putting all this money in, everybody knows he's putting all this money in, when does the Dow go to 15,000, 16,000, 17,000? At some point, the whole bubble's going to collapse. It's going to totally collapse, and maybe about the time the whole currency collapses. But before it collapsed, what I'm trying to get to you, Don, is how high could the market go?
The market, in my view, can only go as high as this Fed maneuver can get it to go, maybe for about a month. You got about a month for this thing to work. And the reason I say that is because when the stock market soars, it's going to increase confidence in the economy. Every election is the economy stupid. So Ben Bernanke may have inadvertently or purposefully just re-elected Barack Obama. Now, if that happens, then Barack Obama is going to be the most dangerous creature in the world. He can be a lame duck president who thinks he's got a mandate. He will have beaten the great Paul Ryan, the best mind of this generation in the Republican Party, and Obama will have won. Do you think Obama's going to compromise on the fiscal cliff? No. We're going to have tax increases that are going to affect every American who pays taxes.
By the way,
the Republicans are going to retaliate by not raising the debt ceiling. We're going to have a treasury default on top of it. Stocks aren't going to like that, Larry.
It's the exact opposite of supply-side economics. It's higher tax rates and easier money, when the original supply-side idea was lower tax rates and tighter money and a strong dollar. This is all wrong.
So we're just checking every box on the how many things can we do wrong list.
I'm just trying to figure out how long the good news in the stock market lasts. I got to ask that question. And you know what, Don Luskin?
Well, I give it about 45 seconds,
Larry. You're coming on the radio this weekend. I'm going to ask you this question all over again.
My pleasure.
Anyway, buddy, thank you. Don Luskin, everybody. Up next on Kudlow.